part 3 of charting here with AK47. Got the 3-part series, finishing it up right now. AK47 over at Prime Trading Investments and Tradecaster.com. Let's get into it. Now, this kind of got 2 parts to this one as well. Like part 2 had 2 parts. Part 3 will have 2 parts. What to be looking for in pre-market into the opening bell, and how to chart that, what to be looking for, but also how to chart the day itself. So let's go into a play that was amazing today for a lot of traders, which was ARM. And so what I see in ARM overall, and typically what you're looking for in ARM, or any, since in ARM, but any play that may make a really good move at the opening bell, is generally is going in an area that it hasn't been in for a while. And so in ARM, what I saw in pre-market, of course, you know me, if you watched the last lesson, part 2, you know I'm in a 15-day, 15-minute time frame. What I'm looking for is some profitability zone. You know, every play's going to have a different area profitability zone and what's good. You know, a play like SMCI, you want $5, $10, $15. You know, a play like SPY, you want at least 50 cents, if not $1 plus. ARM, give me about $2 or so of profitability zone. So if I crack an area, so to speak, I'll have at least $2 to run until I have my first area of profit taking, so to speak. And that's awesome. And so I saw here under 172, essentially, under 172, we had room down to 170, if not down to 169. And I knew under 169, we might even have room down to 167-ish area, maybe even 166. And so those were in my morning alerts this morning for the move down. Why? Because we're in an area we've never been in before, and there's a big profitability zone underneath this mark. Sorry, making sure I'm recording. Underneath this mark, under 172 to at least 170, if not 169. And look here, just in a 1-minute time frame, look what we did here right at the opening bell today. I mean, look at this move. Right through 172, my area that I want to crack, essentially, all the way on down. I mean, there was nothing but red. You didn't have to worry about a thing here. So that's what I'm generally looking for at the opening bell. 15-day, 15-minute time frame. Find an area we haven't been through in a while. You know, a good move this morning as well was AMD. AMD had this downtrend break. Boom, boom. A lot of touches, right? Getting back above that toward the opening bell. And then you're just working your way up through old resistance areas. You know, pop up over yesterday's opening high of 158. You'll see the 159. Monday's high. Over Monday's high, you'll see a move up into Friday's high, which is also a reversal area on Thursday. Over that, then you'll see a move up to 162. You know, over 162, you have a lot. Look at this room to run. Where's what's going to hold it down? In my opinion, nothing until 164. And you can go back in the past year and see 164 bounce on that Wednesday and Thursday, and then on that Wednesday and Thursday. And then if you actually go into today, look how it actually failed at 164 to start off with, just underneath it. Could have gotten your first decent short. Where I get the, hey, AK, where's this going to reverse that? Well, it's all come to charting, and that's where you can find those areas. And then again, on the way up, look where we have the next area. Over that, probably going to go to that high of day. And then I said in chat, probably going to 166. And sure enough, that ended up being pretty much the high of day. You know, at that point, we've run $10. But that's what you're looking for. An area we haven't been in for a while, and it can generally run really well. Right here underneath it, if we would have went under 153.30, look at this. We haven't been underneath that in forever. So that today, if we would have come down, that was also a good short op. If you would have cracked it, because you go back to the 4-hour 180 day, we haven't been underneath that for a while. If we crack it, look, you're probably going to the bottom part of that channel of like 150-ish or so, 151. And then if you crack 150, look, you're dumping all the way down to that lower shot. You know, you're really dumping at that point. Meta was one here recently that I traded here and loved it a couple different times over the past month. Why? Because it's been in an area that it hasn't been in for a while. Here's one of the main days right here, over this 482.50 mark. I'll never forget this. Beautiful breakout that day and went flying. Why? Let's go down on the 15-day, 15-minute time frame. And you can see back over here, or do I have to go back further? Do I have to go back further? No, it was right here. It was this day. It was a 482, yeah. So I'll go back further in the days, though, so you can kind of see the setup I was looking for. And you can see when we scroll back that day that we squeezed, we haven't been over that 482, really 480 mark. And so when we get over the for a while, I mean, for weeks, we couldn't get over that 482.50 mark. And so I knew that morning of, look at this, that morning of, when we get over it, and you could see finally over that 480 mark and then over 482.50 as we were that morning. Look how we even that morning form a bull flag in pre-market. Look at that right there. So we get above 482.50, that kind of area that I was looking to get over, and we're holding it essentially. Kind of going underneath it a little bit, but you get my point. You're over it, and then you're bull flagging. Was yelling at everyone watch for a squeeze. Within the first few minutes, right at the opening bell, 485 up to 490, right? Boom! $5 just like that. That's what you're looking for. Find an area that you haven't been over or under in quite a while, and you'll get a good move out of it. The day this cracked 500 was another one. This is one of those, another recent one with Meta that I traded. Right here. Was that this? Yeah, that was this Monday, this week on Meta. We haven't been under 500 for really last week plus. And the only time we have, where do we crack to? 598.75 to 598.50. So, okay, we'll at least get there. But we could go a little bit lower. So if we crack that, then I know I'm guaranteed a little bit further movement down. And sure enough, another decent move at the opening bell. Not amazing. We're just now getting back to opening bell movements. But that's what you're looking for. If you're looking to trade at the opening bell, and SMCI has actually had a good move here recently as well, you want to be in an area that we haven't been in quite a while, right? And so that helps you out. When you're in an area that you haven't been in a while, like this day that we exploded, when we finally got back over 825, so to speak, because we haven't been over it in a little week plus this nice channel. So then I'm looking for a squeeze out of that channel or a downtrend break like we see right there, or AMD. The longer those consolidation areas get built up, the better the move usually at the opening bell. So pay attention for those. Areas we haven't been in for a while, whether it's up or down, you usually can get more movement and better profitability zone. Now to part 2 of this lesson. Part 1 was right there. Essentially, what to be looking for at the opening bell. And I know a lot of you will go quickly back to the SPY. The SPY had a great move. Look at this right here recently, just so you can see here. Just recently, we're finally above an all-time highs in this channel of 536, 34, whatever resistance, 36, 35, right through there. We get above it, and look at that squeeze. That lets you know, hello, it's a great day to trade it. We can go back a little bit further when we finally broke out of this 25 area. This day, oh no, we got to go further back. My bad. We got to go further back when we finally broke out of this area again, right here. So I've got to go, let's just go to the 4 hour. Let's just go to the 4 hour. Let's go to this right here. And so when the SPY finally broke out of this right here, what I talked about in my last lesson, part 2, when we finally got above this for the first time. So this was all-time highs, right? And then when we finally got above it, look at that day right there. Gorgeous squeeze of a day. That's what you're looking for. Those days are the guarantee. Now, you're going to get them every single day? No, but every day. That's why I start with SPY, then go to Apple, and then AMD, and then ARM, and all the way through those morning voice alerts until I see, and maybe it takes all the way to Tesla, and usually it's before that, though, I'll find my favorite play. Like, oh, this is it. Like today with ARM. When I found this, and we're in an area, A, we've never been in before at all-time highs, up, and away. Do you see how we can get good movement? Do you see how big ARM is moved for the day compared to even plays that are, yeah, they're running with the SPY and they're dumping. But look at that. We're talking 174 to 156. Even NVDA that just finally had its price split is only 140 down to 130. It's a big move. Why? Because we're at all-time highs. But you get my point. I guarantee you Apple and ARM haven't moved that much because we're not at all-time highs. See? We're close to it, I guess, with Apple. We're close to it. I'll give it that. Right? Now, AMD, I know, moved a little bit bigger today, for sure, because it had that big squeeze. But I wasn't anticipating AMD to go from 156 to 166, 167. You know, I wasn't anticipating that, to be sure. I will say that. But now back to these plays like ARM, when you're up, and away. I just letting you know you can anticipate bigger moves. When you're up at all-time highs or areas you haven't been in. Now for charting intraday, what to be looking for. Go to a 3-minute time frame. Start putting your levels in. And what you'd be doing right out of the gate, like say right now if you came in or any time of the day, doesn't matter if it's earlier in the morning, wherever you come in at, start putting lines in. Find your trend lines. So immediately I see a downtrend line from the start of the day. There's your downtrend and downtrend break. I do see a micro trend line right here and a decent trend line crack, although it's not very long. I do see a support sandwichy shelf area right here that did work out again in the end for another short. Remember that was my short I just talked about under 172. Look how that ended up being another good short. I do see somewhat of a channel being built up right here in a consolidation area, right? So, but you could also turn that into not only a consolidation area, but in the end, I actually would have just marked that as a trend line, right? So I'd say, okay, you know what? I do see a channel of support, fail, and then resistance. But I also saw the initial area to get in there, which was the trend line to view up to 90 MA crack. And so I'm going through there putting lines in and putting lines in. There's even another one where you can see where my crosshairs are at, right? And this is what you need to do. This is where you need to come in every single day, whether it's at the end of the day, and it's at the end of the day and you haven't charted this play yet to get more reps in. Find your downtrend. Find your downtrends. Find your, your overall general areas. Like right now, we're in this downtrend and we could be possibly breaking it here in power or into power hour as we move forward into power hour. And then you can even see how the old downtrend almost became support, almost on the dot. That's crazy to see. And so that's all I'm doing is going in and putting lines in. Don't do too many lines because you're going to overdo it. I'd probably maybe even put another line right there-ish in. Old resistance support area. But this would be it. Mostly has just became resistance today, but extend that to the left. You can see what I'm looking at. But those are your lines, and that's what I'd be trading. I'll go through here and I'll do this to multiple plays here so you can see what I'm looking at. Go back over to AMD, another good mover for the day. We'll break it down. AMD, multiple moves for the day. First had this initial trend crack right here. Of course, it's overextended. That's not going to hold forever. So there's your trend crack. There's your trend crack. Here comes another trend line crack right here, right? So there we go. There's another trend line crack right there. This was just that's been in edit properties. When's that been in since? Yeah, that's been in since January, so I won't adjust it. But say for the day, you could probably put a line at 166, 65 for your resistance area. That would have been your resistance. Let's see here. I would have put a support channel right here. Channel of support, little shelf. Now, it did originally break it, and that's what's going to happen from time to time. You've got this great consolidation, cracks out of it, and even in the 3-minute time frame, and then regains it. Well, the one thing you can point, like, what did I do wrong there, AK? Well, one of the main things was the shelf really wasn't that long. It was decent. It was getting there. And the main thing is, you're still just super bullish. You don't know when exactly, honestly, that overall pullback is going to happen. Now, unless it just generally comes within market and everything pulls back together, that's one thing. But you get what I'm saying, where this could happen and it pops up. But it's kind of an anomaly, because you could say the same thing, and I love this, it equals itself out. You could have said the same thing to the top side. So say if you would have come in and put a resistance area, at least to begin with, to the top part of that channel, ignore my red line that I've had in, and then it comes above it, does the candlestick confirmation above it, and then immediately fakes you out and comes right back on down. A lot like that faked you out. Generally speaking, it won't do it more than once. So it'll fake you out once, but the second time around, it's done. So same thing for the top side. If it would have went back up and confirmed above again, it most likely just would have went up that time for sure. And so again, in the end, where am I putting more and more lines in? We got to come over here. Now, it's not always at high of day. Sometimes it is. This one makes a little bit of sense. And we had a micro downtrend break. Didn't last for long. Came right back above it. Rode that downtrend for a little bit. Now you had a good downtrend line in. Then it was just about readjusting the downtrend, honestly, on this play to right here. Now, that's the thing. When you see this readjustment, that's kind of an indication that you probably aren't going to get the best long out of this play. Now, I know we're getting it right now, but that just comes with the market. You can see here, it's kind of a weird day to do this. You saw this huge sell-off. Tomorrow's quad witching day in the stock market. You'll get this weird, wonky, crazy sell-off, and then now we're regaining this sell-off. So on a normal day, we probably just would have been range-bound, and there wouldn't be this crazy, weird movement, like even back to AMD. You probably just would have stayed above or around the VWAP and then moved back up. You wouldn't have this wonky, weird downtrend. So today's a little weird on how to chart. It was great to start the day, to be honest, and now since that quad witching has affected the market and how it's moving, these plays are a little wonkier and where to put lines in. But generally speaking, when you're putting trend lines in, you want to be right there, right into the candles, right? So you can see I got that nice and tight into the bodies of the candles. Who cares if wicks are going through it or not? That's why you use candlestick confirmation. And that's what you're looking for, is making sure you have those lines in as tight as you can into the candles, or into the bodies of the candles, I should say. Let's go over and we'll chart a big play right here. SMCI was actually kind of pretty earlier before we started getting a little wonky. So we did have a little micro shelf crack right here up top. Beautiful shelf crack, which ran technically sound because your crack came up and failed at it twice. Did have a little bit of a shelf built in, and this one was fine. Cracked it the first time, you went down. There was no ifs, ands, or buts. Cracked that shelf in the VWAP, and then you entered the Thanos crossover. Would have put a line in support right here, knowing that if we would have cracked that area as well, you're dumping. So bounce, crack of it. See how that goes down? So pretty. Now, the true trend, you could start it back here. I wouldn't start it from the top this time, or where you'd think you'd want to start it. I would start it right there. Just because you touch those candles, you're touching along the way, you're failing at it over and over. And then when you do try, finally break it, you're moving up. I'd put another line right here as well. Old support becoming new resistance, so a pop back over that 930 mark, you'll get a good move. I'd also put a trend line in right down here as well, knowing that we're getting tighter into that wedge. Now, would I put more lines in? You could go in and maybe put a line right there at 971, 971 and a half, something along those lines. If you want to have to mark out your high of day area, you can if you want to mark out your high of day area. But that's really about it. I wouldn't have too many more lines in here. Nothing that's just yelling at me and saying, hey, here's where you should have your lines, But that's it for SMCI. I usually don't keep lines in. I usually just eyeball them in. I'll put it in every once in a while. Of course, I always do when I go live for you guys or in chat. But typically, I'm just eyeballing them in. Let's go to small cap plays and chart these real quickly. Have a downtrend break right here, obviously on ALUR. We had the initial downtrend break. It was nice and tight, nice and tight, nice and tight. Had a small break, rode it, reclaimed the downtrend, then re-broke the downtrend for the better move. That's going to happen from time to time. You can readjust it if you want to as well. There's your downtrend break. But that's just a second ago, like you saw, where you have these weird anomalies where it's like, okay, we should break out. We don't come down and finally break out. And that's where a lot of those traders are like, well, now you want to go. That's going to happen in stock trading where you think the initial play should be it. It isn't it. You don't get the play. You have a loss. Then the play you want actually does come to fruition later. That's stock trading. It's all about, having the patience and discipline to know that, hey, it just didn't happen to me this time around, but I know I had the right chart set up. It just didn't work out. It's all right. There'll be more to come. You can't get down on yourself, have negative thoughts, worsen really overall your discipline and your confidence, and you don't want that to go down. You go, hey, I was right. It just didn't happen on my actual area that I wanted to get in. And that's going to happen from time to time. Come in right here, and I'd put a line in for right there. That also you could extend it out to the left. Old resistance is becoming new support. We do have a little bit of another area that we could put a line in right here. Old support, resistance, now resisting again right at that 280 mark. Would I put any more lines in? There's nothing that says, hey, I have a lot of touches in an area that I feel like we should. This is really generally your channel now. You had a downtrend break with now resistance at 280, supports at 230. Crack that support at 230 below the 9 in the VWAP. This play will just dump on down. You could put a line here at $2. Old resistance becomes support. You could put another line in right here at 170. Resistance becomes support. That's what I'm looking for in these lines when trading small caps, large caps. Doesn't matter. I'm charting them the same exact way. There's no difference between the two of them. We'll go over to GOVX. This was a play that ran yesterday. So we'll just, that's actually really gross. It's really not a lot to chart there. Honestly, it's really a choppier play. Let's go to, I know we had some more movers today. Oh, NNE. There's NNE. That's not the prettiest of plays, but we do have some play to look at right here. Beautiful trend line crack. So touch, almost touch, definitely touch. And you could get that in there a little tighter if you wanted to with a bit into the bodies of the candles. But we had the trend line crack. That's why I'm saying, that's going to happen from time to time. And a lot of that, what you don't want to go in for those is because why? We didn't get the close and open. We got the open outside of the trend line. We didn't get the close with it. We need the close and the open outside the trend line. We just got the open there. So this would have been your first full close and open outside the trend line for the for the trend line crack. Where would I have horizontal lines in? I'd have some downtrend lines in as well. Could have had one in earlier this morning there. Here's your other downtrend line to have in right there. Nice and steep into the bodies of the candles, about like that. There's your downtrend break for the move on up. So those would be your trends to keep in and possibly play. And then overall for your horizontal lines and price levels, I'd have one there at $15.50. I'd have another one here right around that $16 mark. You could put one at $16.50 to know that every 50 cents is running as support and resistance. And to prove that, you got one right here at $14.50 you could put in. Then you've got another one right here at $14 you can put in, right? So this is definitely running in 50-cent increments overall. And that's what you're looking for. Old resistance becoming new support and using those sandwich areas, as, so to speak, as I call them, over and over and over and over and over and over and over again. GRDI also moving up and still today, like I talked about, careful going short on this play. Pretty easy right here. Put your price level in. As you can see, old resistance becomes what? Now support. We do have a trend line that's been running all day long, right about right there. Now we did have the initial trend crack, you can see, and it didn't crack back. Held that VWAP, which is key. Would have gotten out of that short if you did take the short. Readjusting that trend line to right there. There's your new said trend line. So that's what I'd be looking for. Where your top area of resistance now, I would just go ahead and put a line in possibly right here at the 160-ish or so mark, maybe even again at 170. But then that's when you use the 1 year, 1 day, like I taught to you guys on the small caps, and go back and find more resistance. Where would I put more lines on the bottom side? Your main one's going to be right here at about the just under 120 or so, right about right there. Resistance, support right about 116 or so. Not really that much else. There's a little bit maybe right here at 130. You could put a line in at 130 if you wanted to as well. But that's what I'm looking for. A lot of touches, a lot of back and forth of where you see support and resistance, sandwich areas, so to speak. Making sure you have your trend line in and readjusting it. Finding the true downtrends when you have beautiful downtrends. Getting in with the bodies of candles with those trends, whether it's a downtrend or a trend line. That's how I'm charting every single day. Everything is always the exact same every single day. Getting in with the bodies of candles for trend lines and downtrends, finding the support and resistance areas, the horizontal levels essentially, and just trading those. The ones, like today's a little wonkier, right? As you can see, we're not leveling out on the same level over and over and over after the quad witching sell-off. But before that, we kind of were running technically sound. Old support, what becomes new resistance, okay? Old support, right? Beautiful. When you crack it, you get even more short opportunity, right? So that's what you're looking for. Technical sound movement. You're touching a lot in the same areas over and over and over, whether it's support or resistance, and you're going for the break and crack of those, or you can go for bounce plays or reversals as well in those channels. But that's what you're looking for. You know, you're finding the touches, the sandwich areas, getting those lines in with the bodies of candles. Hopefully that helps out in how to chart. You know, not only at the opening bell and what to look for those spikes, but then also what to be looking for in the day and how to chart. You know, how to put support lines in, how to put resistance lines in. See you next time. There's your 3-part lesson on charting.